to welcome you to this Oil and Gas Connect session on this chilly winter morning. For those of you who don't know me, my name is Namibian, and I'm the Head of Business Development and Ecosystems at Standard Bank Namibia. I'd like to start off by observing Geopolitical. So welcome to Ms. Maggie Shinga, the Petroleum Commissioner. Welcome very much to Mr. John Titus from the Ministry of Mines and Energy. Welcome to Mr. Romeo Nal from Bank of Namibia, and as well as all of our key stakeholders from the Ministry of Mines and Energy, Bank of Namibia, of course our distinguished guests and clients, welcome to this event. Now, I've been lucky enough to be part of the Standard Bank organization for close to 7 years. And something that I'm really proud of is, and something that I believe truly makes Standard Bank unique, not only in this market but in others, is the fact that we have such a strong regional footprint. It's the fact that as a client, you can go to 20 different countries across the continent and be able to see our banner. And this banner means that you're able to benefit and leverage as a client from the experience and expertise that we have. And this is across almost any industry and almost any sector. And so when Namibia's offshore oil discoveries were first announced, and we were told that the country holds an estimated 11 billion barrels in oil reserves, and the discoveries could potentially generate as much as 53 billion Namibian dollars in revenue for the government, we all had questions. We all wondered, what does this mean for us as Namibians, as individuals? What does it mean for our businesses? What does it mean for our clients? And of course, what does it mean for the wider economy? These are some of the questions and conversations we started having. First, internally, and then with our counterparts in Nigeria, in Angola, in Ghana, in Uganda, in Mozambique. And this is just to name a few countries. And these are countries that have been where we are now. And they were able to share with us what they've done right, and also what they've done wrong as countries. This morning, we'll once again be leveraging off of our regional experts and experiences as we discuss the potential, the scenario, the issues, if we're honest, that lay ahead in Namibia really optimizing her oil findings. And so in that vein, it's my pleasure to welcome Mr. Paul Edley Taylor, the Head of Oil and Gas for Standard Bank Southern Africa. I'd also like to welcome Mr. Neil Farney, a petroleum engineer and technical advisor to Standard Bank's oil and gas teams globally, who respectively have upwards of 20 years worth of experience across several countries and continents. I welcome them to share with us the good, the bad, and everything in between as we deep dive into this new frontier as a country. I hope that today inspires ideas and discussions that will enable Namibia to realize her aspirations. And I hope that it conveys just how much we as a bank look forward to partnering with the oil and gas industry to turn the potential it presents into reality. Thank you.
Just a microphone check first. Is it this one or that one? This one. Great stuff. It's always good to know before you get going. Absolutely delighted to be back in Fintup. It's the fourth time so far this year. I think I'm on about 70 plus for Mozambique, so I very much look forward to Namibia going past Mozambique probably some point in the later 2020s at that rate. The idea today is I'll do some slides, but sort of conversation. I'll focus on the commercial and financial things we've seen so far, and some of the strategic questions. And then Neil, who's far more technically qualified in petroleum engineering than me, but I'm a little bit more qualified in terms of banking than Neil, will reply in terms of conversation and some of the key issues, and then obviously we'll throw it into the audience. I'm not going to talk about Standard Bank Namibia, that's been done very well by my people. But what I will mention is where we are as a bank in terms of oil and gas installation in the energy transition and also our climate change policy. This is obviously a huge topic globally. From a bank perspective, the oil and gas sector, as well as the mining sector, among others, remain the bedrock of the African economy, and we remain committed partners to the responsible development of oil and gas going forward. Specifically, in the last 11 months, we've seen material discoveries not just here in Namibia, but also in Côte d'Ivoire, and we've also seen the progression of previous discoveries in each of Tanzania and Uganda. The bank has been committed to the responsible development of hydrocarbons for a decade and a half now, as signatories to the Quater Principles since 2008. And the current version, EP4, includes a climate change risk assessment, which Neil coordinates with other colleagues on behalf of the bank. And specifically this year, we're delighted to confirm that we've issued our climate change policy. This has gas down as a transitional fuel for the foreseeable future. That's in line with organisations such as the European Union, who's recently declared gas green, of course, and the International Energy Agency, among others. And we've also committed to a 5% reduction in our upstream advances by 2030. Energy is fantastically topical at the moment, in much the same way that something like Zoom was topical a couple of years ago. So I'll give you a very quick crash course in terms of global energy. This is BP's latest statistical review, and what it has is the three bedrocks of the global energy sector. Coal, oil and gas account for about 82% of global primary energy supply. Renewables is increasing over time, it's increasing at a fast rate from a very low base. So renewables in terms of global primary energy supply is around about 6.8% last year. So the message is very much, whilst renewables is growing, it's going to take some time to get to a landing point and a level position with the core of global energy supply. So very much the message from our side is that carbon-based fuels have a significant future, but we expect them to be increasingly decarbonised over time. In terms of prices and demand, the COVID shock is well and truly behind us, where global oil demand plummeted about 8 million barrels a day due to lockdowns. Of all the statistical sources, and we use the Dallas Fed here, demand is around about back to 100 million barrels a day. And similarly, pricing recovered even before Russia-Ukraine to around about $18 a barrel. And you see the current spot prices have been elevated by Russia-Ukraine, about 107 yesterday, and they continue to look pretty good going forward. So what does that mean for Namibia? What it does mean is that within the energy transition environment, we believe there is still a good chance and a good prospect for Namibia to develop its resources. Certainly oil being found, potentially gas as well. And if we look at the pricing going forward, there is very much a market opportunity. If we look at CME Group, the Brent crude oil futures are about $70 till the end of the decade. From a gas perspective, JKM, which is the main spot index in Asia Pacific, that doesn't drop below $10 until 2027. So the economic context for Namibia remains pretty good in terms of developing its resources. And then, of course, we come to Russia-Ukraine. This has been a massive geopolitical shock in Europe especially, but in addition, in the world of global energy, you have some very large changes. First of all, a number of sponsors are pulling out or scaling back their Russian activities. Some of their sponsors are also involved here in Namibia. Secondly, from a sanctions perspective, Russia has been heavily sanctioned in terms of financial flows. In terms of an energy lens, those sanctions were significantly less for a period of time, but are now starting to step up. And by the end of this year, the European Union is requiring the cessation of Russian crude oil exports by ship. That's 90% of their exports. And what we have seen very recently is gas increasingly being used as a so-called economic weapon. There's been a reduction in flows, there's been conveniently timed maintenance schedules, but very much the message is that the European Union is under gas pressure. As a result of this, there's not one, there's not two, there's not three, but there are 22 individual gas export projects on the go in Europe, according to Go Energy. And a number of projects have already taken FID. Germany in particular has gone from zero FSRU or land-based terminal development to 4 or 5 under active
give you a couple of numbers. So the Germans bought 87 BCM of gas last year. That is equivalent to 62 million tonnes of LNG. And not a single BCM was bought through LNG imports. I checked this morning, the Germans have now under active development 50 BCM of LNG import projects, as well as ammonia and green hydrogen. So on that slide there, we give a statistic that if the Germans moved half of their gas purchases to LNG imports, that was equivalent to Tanzania LNG and Rwanda LNG put together. Actually, our statistic was wrong. The Germans have been far more aggressive than that in terms of LNG developments. So the message from the Namibian point of view is that the uncertainty from a geopolitical lens from Russia-Ukraine can only benefit Namibia. And from an African lens, we've seen increasing interest in Senegal. The German Chancellor visited there the other week in terms of the second phase of Tour 2, and there's every expectation on our part that Namibia continues consideration of fast-track development of its material discoveries, and then it can be a beneficiary from the uncertainty arising from Russia-Ukraine. Let's touch on LNG briefly. It's early days, we don't know how much associated gas Namibia has, we will talk about it, I'm sure. But there is some possibility that Namibia may have enough gas for at least a nearshore LNG terminal or perhaps mid-scale trains. If that's the case, the message is really the same as the previous slide. The global market is quite opportune for new LNG players. On the exhibit there, we have a graph from Next Decade, US developer. What they're basically saying is that the world of LNG has further improved in the last year. So LNG is the cleanest form of carbon-based fuels. A number of observers expect the current demand of about 410 million tonnes to go to about 700 million tonnes by about 2040. But what's really happened as a result of Russia-Ukraine is the composition of LNG supply. On the one hand, you have official targets seeking to reduce Russia's involvement in hydrocarbons. That's the European Union in particular. That means we substitute forms of LNG from different countries, and at the moment there's a lot of American LNG taken off FD. But in addition to which, Russians themselves are looking to develop new LNG terminals. And a lot of those terminals will now not be built, or will be built many years later because of sanctions and technical limitations and so on. So that's market context. So it's really fairly good news from a Namibian point of view. Again, we've got a mix of an audience here, so just very quickly, what's the difference between oil and gas? There are quite material differences. The oil market has been established, broadly speaking, 100 years. It's a huge spot market, highly liquid. We have a situation where oil is literally traded. Once the oil is on a ship, it's taken to a refinery, and then it goes into a very deep liquid global market, where the main customer base for oil is the global transportation sector, backed up to some extent by petrochemicals. The world of gas is a little bit different. We do have some global trade, increasing in the form of LNG, but there's a real need for dedicated infrastructure. Liquefied natural gas is very simple in concept, it's a big freezer, but in practice it's extremely expensive. We have projects of $20–30 billion and beyond that are required to take that to market. From a pricing perspective, we're starting to have global pricing, but it's still imperfect. We can see that in the differences between prices for say, the underlying gas in America and the price at which American gas is sold at a spot price in Germany. So you have examples from Germany, in Holland, TTF. So you have examples at the moment where American Henry Hub can be $4 or $5 an MBTU, it's dropped recently, but spot prices in Germany, or Holland is the case, may be $25–30 a barrel. And then what's the cycle of oil and gas development? This is something, again, for new countries in particular that's extremely interesting. Oil and gas is a long-term industry. On our exhibit there, we have around about 13 years from the start of seismic activity to production. You have 2D seismic in undertaking process, then you have 3D seismic undertaking process, then you have initial exploration wells which become appraisal wells, and then turn into production. The field can last for 20, 30 years and beyond. What we don't show on that graph is the pre-work before the 2D seismic. That can also take 2 to 3 years. In our jargon, we have things like licensing rounds, you have auctions. And in the case of Shell Namibia, the process started off with Sigma Petroleum, I believe, in about 2011, something like that. And what we also don't show on the graph is the decommissioning of individual fields that take place at the end of the process. But what we can say is that the energy transition is putting pressure on time frames. That graph is not necessarily represented anymore. You have situations where chloromethyl energy in Mozambique took 6 years from first exploration to FID. In the Côte d'Ivoire, you have Ian Palani seeking to do the same thing in 2 years. So the talk in Namibia of fast-track developments, at least of the potential oil in the first phase, is very much representative of the global trend, where the energy transition is putting pressure on the overall visibility of long-term oil and gas demand. But secondly, as we've mentioned, the whole Russian-Ukraine dynamic, the economic recovery from COVID, is also showing a market opportunity for jurisdictions that investors trust and are responsible, are seen as low risk, to capture some of that market. Then we touch on Namibia's discoveries. We don't have Wood Mackenzie here, an established public domain source. What Wood Mac have said is that across the 3 fields that have been found so far, 3 discoveries, and they've only issued numbers for 2, and they've said 3.7 billion barrels recoverable across Venus and Graph. They haven't commented on Marlowe yet. The number that Fico mentioned, 11 billion, I think she said, is broad ballpark. Some publications are higher, some publications are lower. But what's quite clear at this stage is that the discoveries are material and extremely interesting, and we're on the start of the journey. This is the slide I want to focus on most, and this is really the orientation of where the discoveries are in the Orange Basin, North Namibia itself. The briefly mentioned about our overall regional approach, and I think what's super interesting about the discoveries is not just their impact on Namibia, which we're also going to focus on today, but their potential implications for South Africa as well. So let's talk about the discoveries first of all. Is this working? Never mind. Towards the southwestern part of Namibia, roughly 280 to 320 kilometres offshore. Very much, we think going forward, the spatial economic geography of Namibia is going to change. Obviously, we've got the capital city here, Windhoek. We've talked about Walvis Bay. The mines are located towards the coast on the whole. It's likely that the Lüderitz area, the broader Lüderitz area, is going to be a very important central economic activity in Namibia. So on the one hand, you have the discoveries offshore, the green hydrogen developments or south of Elizabeth Bay, probably going to be exported from Angle Point near Lüderitz. Angle Point is something like that, may or may not be the central supply base. And then if there's as much gas as some people think, there's the possibility of an LNG terminal. Where will that LNG terminal be located? It needs deep water, it needs adequate land, perhaps it could be Elizabeth Bay, perhaps it could be Angle Point. These are potential decisions for Namibia to make. But they are extremely interesting. And what you see down the coast on the left-hand side is what we call a strip or fairway. And essentially the 3 discoveries so far have, in our jargon, de-risked a large part of the Orange Basin. And that's not just the Namibian side. We expect a lot more activity in Namibia. In our jargon, we expect people to farm in, that's new investors. We expect a change in the composition of existing blocks. We expect more wells to be drilled. But also on the South African side, we expect a lot more activity. Many of the names who are involved in Namibia were also involved on the South African side. On the South African side of the public domain, there are very extreme electricity shortages. There is what's known as load shedding. You also have a situation where a lot of the electric power sector needs to be retired over the next decade. So to the extent that the Orange Basin is gaseous as well as oil-prone, we do expect significant exploration on the South African side. And what you also see there on our map is a pipeline. And we've put it there, it's purely indicative, it's Standard Bank at this stage. But just to give you a sense of geography as well, South Africa to Mozambique has an existing pipeline that's 865 kilometres long. It's called Ronco. The distance, broadly speaking, from Venus to Saldanha is around about 550 kilometres. So one of the things that we can guess going forward will be the increasing economic integration of Western South Africa and Southern Namibia, centred around gas, in the same way that the South African power pool has electric flows across many borders. I don't want to exclude inland Namibia as well. Recon, to some extent, hasn't really been focused on so much. Very active in the Koranga region of northeastern Namibia. Recon, we understood, started our first exploration well a couple of weeks ago and is in the process of moving towards target depth. Recon is very interesting because, again, it depends what they find. If they find some form of hydrocarbons, perhaps there could be a small bespoke refinery that can supply landlocked Southern Africa. If gas is found, there's every possibility of developing sales by either gas by wire or gas by pipe. Again, Central Southern Africa is landlocked, we're competing against Asia, we're competing against diesel. If there is drought in markets such as DRC or Zambia or Zimbabwe, then you have energy security issues. So we also are watching this space very closely because we can see the possibility of cross-border trade. And then just to mention Walvis Bay, I've had the privilege of going to Walvis Bay 2 or 3 times this year. I think it's a fantastic national asset. Going back to the point about orientation and spatial geography, there is some distance between Walvis Bay and Ugarit, but what you have is a major, potentially world-class port. And you have a container depot, you have commodities going out, cobalt, copper, coal and others, fish in Namibia, you have commodities going in. You have an existing oil and gas services business there, you have a resupply business, and very much in terms of looking at a broad diversification strategy for monetising and ensuring the benefits of oil and gas are spread across the whole Namibian economy. Walvis Bay, I think, is also just too important to ignore. The world is fast changing, and the oil and gas world is fast changing as well. A lot of markets who discovered resources in the 60s and 70s haven't always done the best job of it. That's fairly transparent economic data. But what has changed over the last 20, 30 years, a number of mature markets have done a very good job on the whole of developing oil and gas. I'm thinking here, the UK, Norway, Australia, even the US to some extent. And a number of emerging markets have done a pretty good job too. Obviously, the poster child is Qatar from an LNG perspective. In terms of LNG, Papua New Guinea's not done too bad, Peru's not done too bad as well. But in the world of oil, the standout performer of the last decade is Guyana in Latin America. And Standard Bank has spent quite a bit of time looking at the case of Guyana over the last few months. And our feeling is that the Guyanese precedent is something that Namibia ought to look at extremely closely in terms of its own oil and gas development trajectory. So what's really interesting about Guyana is its resources and reserves were found very recently. The first discovery was found in 2015, but the country took its first FID fairly soon after, in 2017, and entered production in 2019. Since then, Guyana has found 11 billion barrels of recoverable reserves. It's made 26 exploration discoveries. It's taken a final investment decision, that's an FID in our jargon, on 4 individual FPSOs, that's a floating production and storage operation, big ships that do the oil, which we will talk about. It is down to produce 850,000 barrels a day of oil by 2027. But what is extremely significant from the Guyanese point of view is that the declared strategy, which has been successfully executed to date, has been achieved without any impact on its credentials in the energy transition. Guyana obviously benefits from massive rainforests. It's involved international entities in that, and it's very much put down the market to say that its hydrocarbons production will not affect its energy transition credentials. And there's also one final point of the summary introduction, which is economic growth in Guyana. Economic growth in Guyana this year is 48% in real terms. And that's fully signed off by the IMF and the World Bank in terms of documentation that's publicly available. So I'll read across at this stage. The Guyanese role model could one they'll be one from Namibia to emulate going forward. So just to give you a couple of specific data points, this is roughly the first 10 years of Guyana, 2015 to 2025. So what we've done here is essentially said, well, here we are in July 2022. What can Namibia theoretically look like in 2032? And this is the amount of money that the Guyanese have spent. And if you look there, it's about $44.5 billion. If we go on what's been spent to date, what could be spent going forward? Namibia's GDP is in the order of $12 billion. So you see quite clearly that if the resources and the reserves that we're getting here are on the order of Guyana going forward, that is roughly the cash spend that the Guyanese have spent over their first 10 years. So again, if you put this in a Namibian trajectory, you have round about 3 to 4 times GDP would be required to be spent on Namibia over the next decade. And just to give you a couple of factual specifics around Guyana, there's 2 or 3 things that are really interesting to us here. The first one is they spend a lot of time working with international organisations. Pretty much all the brand names are listed there. The World Bank involved at some stage, the Inter-America's Development Bank, and the UN's Environmental Programme. I think that was a really significant stage. The second thing that the Guyanese did very well was transparent moves towards a sovereign wealth fund. We had noted that Namibia is heading in the same direction. We applaud that. And what the Guyanese have done is they spent a lot of time in Parliament debating their sovereign wealth fund. Version 1 was deemed not adequate, so they moved on to version 2. If you look on the internet, you can see the credit balance of that account in the Bank of New York. It's literally the US dollar balance was available on the internet. But what was extremely interesting as well was the sheer transparency of the Guyanese approach. So they have a website, they put the hyperlink there, which literally publishes every single document in relation to the sector. So the time of which sessions are there, the environmental applications. And what they do is a very large, comprehensive quarterly document called the Country Energy Brief. It's unfortunately half the time it's too big to download, it's about 40 megabytes. But it tells you everything about the exploration discoveries, everything about the fields that's been publicly disclosed. So it's a really interesting one. And then this is just a hypothesis at this stage. What could the money be spent on? What could the proceeds be spent on? If you look at the Guyanese case, what they've spent a lot of time on is a real concept about connecting Guyana to the region. And for those of you who don't know, Guyana's got a land boundary with Brazil, it's got a boundary with Suriname on the coast, and also French Guyana is the next one down. They're improving the road connections, they are building a deep water port at Georgetown, and it's not just going to be focused on oil and gas services, which Neil I'm sure will mention, but it's also intended to develop the Guyanese tourist industry. So if we put this in a lens of Namibia, what are some of the priorities that Namibia could focus on? I think one of the crucial ones is national electrification, national adequacy of water, national sanitation. It's going to be important for the social licence to operate oil and gas and to ensure that all 2.5 million Namibians benefit from the proceeds. This is almost certainly going to require desalination plants. Namibia, as we know, is arid, Those desalination plants, I'm sure, will be supplied by Namibian gas going forward from the Middle Eastern model lines. I think coastal development is an important one. We know there's no road at the moment between Ludwig's and Walrus, that's bound to lead to coastal development over time. Is that something that should be addressed? We've talked about Walrus Bay, possibility for a North Port. You have the possibility of improving the rail links to make sure that commodities from the DRC and Zambia can be taken by rail all the way through Walrus Bay, which would have massive environmental benefits. And you also have the possibility of increased road beds. Another one we consider, we saw an FSRU scheme in Walrus Bay a few years ago. Almost certainly that scheme will come back. It will allow Namibia's own gas to supply central and northern Namibia and also the landlocked countries of southern Africa. So we can see many different possible uses of funds and for sovereign wealth fund, the domestic stabilisation fund, to improve the country over time. So just to finish up on the final slide, and I'll hand over to Neil for his reflections. I think the first point from the market sense, there is no doubt that the oil and gas industry has recovered from the COVID downturn and has most definitely from a pricing perspective been affected by Russia-Ukraine. Probably the long-term oil prices are in the order of $70, something like that. We've heard talk of a war being in the $30, but spot prices at 107, forwards over $70 till the end of the decade. On the one hand, it's unfortunate for us as consumers, it means higher inflation, it means the pump price is higher, but from a Namibian point of view, it's a pretty good time to have found oil and gas. Partly because prices are good, so sponsors can be confident of returns, but secondly, the Russia-Ukraine environment is actively encouraging new investor-friendly, peaceful jurisdictions to supply hydrocarbons. In terms of the discoveries, 3 discoveries made so far, super exciting. The momentum is all about the next wells, what will happen from the next wells, what will we learn from those wells. I'm sure Neil will talk about that. We shouldn't also forget recon inland. This is going to be potentially interesting if either oil and gas is found in terms of supplying landlocked Central Africa. We've mentioned already the dry month precedent is extremely important for Standard Bank to suggest and recommend Namibia has a close look at. Why is it we have deep water discoveries made in the energy transition environment? You have a small population, you have a frontier market which has successfully developed material quantities of oil and gas in the last few years. You have high quality sponsors who are drilling the resources in an environmentally friendly manner, and they have the money to do so. And the developments have been developed on a fast track basis. We must comment about the energy transition though. ENI's delayed development is scope 1 to net zero equivalent. We think that will probably be the precedent for most African upstream oil and gas going forward. We expect Namibia will be in that category. It is quite clear that the process of oil and gas is partly need to be focused on the energy transition in Namibia. How can we sustainably develop Namibia more clean energy, off-grid PV solutions, all of those types of activities. And from our perspective, we can see the physical integration to some extent of green hydrogen and gas developments. The nearest landing point for the gas is probably something like Elizabeth Bay, Angler Point, Lederis. The green hydrogen is just south of there. One can readily see an example where wind farms or PV electricity from solar arrays could be supplying a Namibian LNG plant. That's very easy to see, which hopefully is pretty similar. And then just finishing off, this is potentially transformational for Namibia. We would encourage a post-2020, a post-COP26 approach to developing resources. Yes, they have to be developed responsibly, we've talked about that, but as well as being fast-tracked to take account of international energy dynamics, we would really encourage a strong national plan as to what the proceeds could be spent on. The Qatari example is a good one. The Guyanese example is arguably an even better one. There's lots of things in Namibia that the proceeds could be spent on. We've talked about access to water, sanitation, adequate electricity, connecting Namibia. So with that, I will stop there and hand over to Neil.
So one of the good things about doing business Paul is actually a lot of time left to produce a presentation. But on the downside, it's a bit like following the Beatles at Shea Stadium. The cool guy had to sort of go on stage after those guys. So as I was introduced earlier, I'm probably as technical advisor for Standard Bank. I look after effectively understanding the risk of oil and gas developments for our financing partners. You know, I've never always worn a suit and tie. This is a little bit of my history. I was a civil engineer originally, and that's a picture of me, which is started almost 40 years ago, when I was working on the railways in Scotland, and that's the Fourth Bridge, I call it Fourth Bridge. And unfortunately, worked on it for a long period of time, and that picture of me is inside one of the tubes that run on the bridge there. I moved into the oil and gas industry. I spent most of my time in coveralls and hard hat, and that's me working in the well in Vietnam about 20 years ago. So rather than come and take this me up there, I'll go back to the team. So what I'm going to talk about is some of the challenges that Namibia is going to face with regards to the development of its oil and gas activities. First of all, congratulations to Namibia. It's been a long journey. It's been a journey with quite a lot of patience, and eventually you've found some world-class discoveries. And the really are genuinely world-class, as Paul mentioned in his presentation. The way it is just now, it potentially comparable to Guyana. And Guyana really is the hotspot in the international oil and gas industry at the moment. Namibia could quite easily become a hotspot, similar to Guyana is. What do we know about the discoveries? From the public domain data, from WeMap, IHS, people like that, there's a total of 3 to 4 billion barrels of oil equivalent. So that's roughly sort of 3 billion barrels of oil, potentially 10 to 15 trillion cubic feet of gas associated. That's what we know at the moment. That's what's understood from public data. Obviously, Shell and Total are quite regular, keeping the information very close to their chests as they appraise the discoveries. But potentially, those numbers could easily double. 8 to 10 billion barrels, 15 to 20 TCF of gas is not something that is out of the range of possibility. One thing that's going to happen is, as Paul said, these wells are unlocked exploration appraisal. All oil and gas companies are risk averse. What tends to happen is you get one person coming in, open up the basin. You know, Namibia's tried for many years wells, every couple of years, which has been disappointing. And then another company comes in and drills another well. But what we'll see now with these discoveries, we will see people rushing to Namibia, rushing to this part of the African region to do the exploration for sure. We already know from contacts we have with other international IOCs are looking to come into the country. Some of them have already got licenses, some of them are looking to pick up licenses, but there will be an increase in activity. Shell and Total alone are working in where they are. I would expect 2 to 3 more international oil companies to come in. I would expect to see several more discoveries. They may be the same size as being seen graph, they may be smaller, but I certainly expect the volumes to increase. Everything being published in the public domain by people like WeMap have suggested significantly more resources are available to the country. So what does that mean? That general rush of activity and exploration is going to be similar to what we've seen in Shell and Total. Those exploration activities have a very relatively small footprint, they're very specialised. Companies come in and they leave, they bring equipment in, the equipment leaves, and there's not really a solid base left behind. But if that exploration activity becomes much more commonplace, then there will be much more permanent bases put in place in the country to support those operations. They won't just be trying to be temporary, they'll be permanent, because it's going to be an activity which is going to be going on a semi-permanent basis. From a production perspective, just looking at Venus and graph, the way we see it is we expect to be at least 3 production hubs, which is going to control the production from these areas. That production hub, potentially 3 floating production vessels to handle the production. In reality, those vessels are not going to get built in Namibia, they're going to be built overseas, and going to be built specialised yards in the Far East in particular. But to support those production hubs, you will have a range of new companies coming in to Namibia. A lot of them are here already, with very small footprints, supported from other places across the African continent. But with the level of activity, you're going to see these companies make permanent bases here in Namibia. And those permanent bases are significant. You know, I know I represented some of the big service companies here today, but my experience in working in similar kind of environments is you can have these big service companies putting in 200-300 square metre warehouses. Those warehouses are sophisticated and specialised, specially built, overhead cranes to handle equipment, pressure testing bays, cold storage laboratories for equipment, electronic laboratories. But these are going to be permanent, specialised bases. There could be 20, 30 of these kind of facilities required to support not just the exploration and appraisal activity, but long-term development and production activity. So you're looking at a very large footprint of an ecosystem that's going to come in to support the oil and gas industry with these developments, with these discoveries. That also brings people, expertise, and a lot of this expertise is naturally initially going to come from overseas. A lot of expats are going to come in, they're going to bring their families in. So you can see that this is opening up a huge ecosystem for the Namibian companies to get involved and to support. Over time, in the longer term, more and more Namibians will get involved directly in the oil and gas activity, through training schemes. You know, we talk about Mozambique, E&I, who's developing coal FLNG in Mozambique. One of the things that they had to do with the government regulations was to set up a training school. So that training school is for the operators for the floating FLNG vessel. It's not just for that, it's for the support staff who are going to be working in support bases. There's 200 to 300 cadets, trainees, moving through that school as we speak just now. I was fortunate enough to go out to the shipyards in Korea. We were building the FLNG vessel, which is an enormous beast. It takes about 5 minutes to walk the entire length of this vessel. And there was 25, 30 Mozambican trainees working with ENA in the shipyard who've been employed by ENA. So there's going to be a massive opportunity for young people in Namibia to get involved in the oil and gas industry over time. But I emphasise, I'm sure you all understand, this is a very specialised industry. It's over time. It's going to take, I would say, the best part of a generation to train up the Namibian specialists to get involved in this. But this is what companies like Shell and Total, whether I've seen come in, we're able to do the experience in doing that. The service companies do the same. We're not going to employ everybody from overseas. We're going to bring in the management and specialists initially. But long term, there's going to be a lot of jobs coming in to support this ecosystem. And that ecosystem, specialist end of things, also has to be supported. People have to be housed, people have to be fed, people have to be transported around. Companies need to be able to support those big companies, plumbers, electricians, builders, specialist machine shops. You don't want this to do that and bring it in, you want to do that locally. So there's going to be a huge ecosystem which is going to follow oil and gas, and that's opportunities obviously for all Namibian companies across the board, even if they don't have any oil and gas specialisation. So it's certainly something that you as Namibian business people can look forward to and certainly expect to be involved with over time. The initial development of these activities is going to be development of oil. The oil is where the immediate value is, and from an Namibian perspective, you're not going to see much of that oil. That oil is going to be produced in deep water floating production vessels, and it will be exported into the international market directly from those vessels. It's unlikely, as we see at the moment, that any oil will be transported back into Namibia. However, gas is a different story. Gas, as Paul mentioned, is not something that you can store. You can bring it in and do it, you can convert it to LNG to transport around the world. But gas is a commodity that basically has to go from the point of production to the point of use relatively quickly. So gas is an enormous opportunity for Namibia. That gas is likely to be landed somewhere close to the Liberus Elizabeth Bay area. It's kind of the thought process we have at the moment. And from what we can see from the discovery so far, there's a significant volume of gas out there. There's more gas than they need to manage the oil fields. The oil fields will be managed by re-injecting some of that gas to help the production, to maintain the pressure, to move the oil closer to the wells. But in reality, a lot of that gas has to be bought, has to go somewhere. And if the volumes are what we think they are, it's likely that some kind of a liquefaction plant will be required to put that liquefied gas into the international market. But with that gas coming on shore into Namibia, there's an amazing opportunity for Namibia to utilise that gas. Now, with the energy transition, my personal viewpoint is that the long-term future is in the hands of the electron. But that electron has to be generated somehow. So with this gas coming in, it allows further electricity generation using that gas. It provides security of supply, security of resource for the electricity generation in the country to really plan ahead. But the gas also gives huge opportunities for its own ecosystem to support the Namibian industry, either through gas to power for actual industry, or just having more access to electricity for industry. There's fertilizer plants, petrochemicals, all these kind of activities are available with the fact that there is a secure resource available to you. The last thing we wanted to talk about was, as Paul mentioned, ESG. ESG is, in the world that I live in, ESG was always occupational safety, it was health and safety, it was always like making sure that where you were working, you were being kind to the environment, kind to the area you were working. But ESG in the financing world, for sure, as it stands at the moment, is all about energy transition. It's all about climate change, and it's all about emissions. And absolutely that is the right thing for us as financiers to do, and it's the right thing for the oil and gas industry to do. One of the beauties that Namibia has of these developments is it literally has a blank sheet of paper in front of it. It's a blank sheet of paper which has got boundaries on it with the expectations of the modern world, and the expectations of the modern world are very different from than they were even 2 or 3 years ago. So Paul mentioned earlier about net zero. The developments here, in my opinion, have to be developed in a net zero manner. There is no other choice to legitimise the oil and gas developments. So you need to be looking at minimising the carbon emissions at the point of production, minimising the carbon emissions at the use of the gas in particular when it comes on shore, and making sure that the developments are done really with that completely in mind. There's opportunities for carbon capture associated with these developments, and these things are not cheap, they are complicated, but these are the kind of things that Namibia really needs to be thinking about to develop these opportunities. We really need to have that net zero focus at the back of their minds. The oil and gas industry is working very hard to move to that direction, despite what might be portrayed in the media around the world. And you've got 2 companies leading the activities at the moment, Shell and Total, who climate change activity, carbon reduction, absolutely at the forefront of their mind and all their activities. But Namibia can put an extra layer on top of that by making sure that we really work very hard to work on that. From an African perspective, one of the biggest opportunities that the gas gives you is fuel substitution. There's many places across the continent that don't have an electricity supply or a reliable electricity supply and are using diesel generators to either power their industrial equipment or just substitute the electricity that's available. The many places across the continent are still using solid fuels for cooking, for heating, with the associated deforestation, health issues. So the gas also provides an ability to improve the LPG supply, the NGLs, portable liquefied gas which can be moved around the country to replace solid fuels, displacing diesel generation with associated emissions by cleaner electricity. And also, from an LNG perspective, is to contribute to that decarbonisation or that use of lower carbon fuels across the globe. So that's coal substitution. So LNG exports into places to replace coal for power. So Namibia has a huge opportunity with the resources it's got, not just to do its developments correctly with regards to making sure we meet net zero as much as we can, but also to contribute to the lowering of the carbon footprint of the energy market across the globe. That's really all I wanted to say. I say it's a wonderful place to be in at the moment. It really is for all of us. It's a wonderful piece of paper for Namibia on development of its oil and gas, development of its ecosystem. It's an opportunity to really get out at the very bottom start of this process. And I look forward to being involved in the future and the success as we move forward.
Thanks very much, Paul Neil. We'd like to open it to questions. There are going to be two roving mics, so if there are any questions, one and two. There you go.
So, super interesting information, very exciting. And I think in terms of the potential, very great. But my question is, the oil, as we know, is sort of on a downward trend. And I wanted to get your opinion on what is sort of the future prospects. So I think you mentioned a couple of times about the structural changes that can come about. So training up the whole generation, what does that actually mean? So if we change Namibia structurally to cater for oil and gas, what does that actually mean for Namibia in 50 years' time? Are we structurally disadvantaging ourselves for the likes of green hydrogen or other potential industries? So just if you can elaborate about how do you see the oil and gas industry developing? Thank you.
So microphone for all. Okay. Yeah, it's a really interesting question, a really interesting topic, because the underlying issue, where does the world's energy demand come from, has really become almost a victim of the culture wars at the moment. So I'll give you a nice easy example. The IEA actually published 4 different energy scenarios in their World Energy Output document. And those 4 scenarios are not the road to net zero document that was published May last year. So it all literally depends which source you look at. But most of the sources we look at, and over the breakfast I can point you at some of the projections offline, see a significant demand for oil through to 2050. And the sort of bedrock of that is even if things like EVs come through, they'll take off about 8 million barrels a day. It's about 25% of mobility. But the world's population going to 8-9 billion GDP growth is going to increase the amount of petrochemicals by much the same amount. So again, depending on which source we look at, the demand for oil will still be significant in the middle of the century. In terms of green hydrogen, why I specifically mentioned the Guyana example, and also green hydrogen as well, is there's no conflict between the two. You're supplying different energy markets with different requirements for either industrial consumption or mobility, and it's very possible for the two to work together. And if you look at the Middle Eastern model at the moment, a lot of the Arabian Gulf producers have been producing hydrocarbons for 40, 50, 60 years and beyond, are essentially bolting on green hydrogen and blue hydrogen to their developments. in much the same way that Australia is bolting on green hydrogen to its mining sector development. So we would probably encourage an all of the above approach of Namibia to satisfy the world's energy needs in a decarbonising manner going forward.
I'd just like to step in and say that production in the world on an annual basis declines around about 15 to 20%. So if you do nothing, production will just gradually drop off. So you're constantly having to backfill that production with new discoveries and new developments to maintain the supply to meet world demand. The world demand is 100 million barrels a day, give or take, recovered after COVID. In even the most optimistic climate change scenario, oil and gas still plays, about 50% of the energy mix. So there's still going to be a requirement for oil and gas, even in a 1.5 degree scenario. So the question on how relevant is oil going to be in the future, yes, it's going to remain relevant. And what will remain relevant is good quality, world-class developments which have low carbon footprints. But that kind of production will continue, whereas the older, higher carbon footprint production will start to fall away. So if Namibia does it right, and it develops the fields in the way that it has to develop the fields and should be developing the fields, that production should be available for a long period of time. And with regards to the legacy and generational legacy for people, a lot of those skills that these people are going to learn in oil and gas are going to be transferable into the renewable space. If you look at my background, my alma mater from the oil and gas business, which is the North Sea in the UK, the North Sea is at the very end of its production cycle. It's actually decommissioning more fields than it is developing. But the job base in the North Sea is moving into the renewable space, it's staying in the energy sector. So the construction jobs, without decrying what these people do, are easily transferable from oil and gas to green hydrogen. These guys don't care whether they're tightening up bolts in an oil field or tightening up bolts in a wind farm. And that's what's happening. So I think the most important thing is getting those jobs and those training schemes going.
I think Klaus was next.
Well, thank you very much for a very interesting presentation. Well done. My name is Klaus Andresen. I'm the manager for the BW project. So we are working on the feed for Kudu. And the aim is first gas and first gas to power 2026. We see that there is a certain difference between financing development that this presentation has focused on and financing new exploration. You talked about the potential in the Orange Basin that needs to be unleashed. How do you rate the possibilities for sufficient financing for further exploration in the Orange Basin? And assuming that financing is actually going to be constrained for oil exploration, are we in Namibia in a competitive position with other destinations? I.e., how does our investment framework and climate relate to this new phase that we're entering? Thank you.
Well, let's say from a financing perspective, we as a bank and most banks have never financed exploration. That's always deemed to be too risky, and that's always been left to equity, either private equity or individuals. That hasn't changed. All the time I've been in the bank, it's not necessarily related to energy transition or climate change policies. That just generally is from a bank financing perspective where we stand. We are seeing people who are still interested in funding exploration activity, particularly in an area such as this where we're having success. As I mentioned in my talk, success tends to generate much more interest, and the money that is available for exploration activities will be looking at places like Namibia with the quality of the finds
here. So the basin has been de-risked, for sure. Whether all the plays in the basin have been de-risked is another matter. But it does mean that what exploration funds that are available globally will be looking very closely at Namibia. And a lot of that's related to the fact that it is a new basin. It's a new basin where financing can really look at it in a way that this is going to be done properly from an energy transition perspective. So the money that is available will have constraints on where we can and can't do business. Namibia clearly is a place which is very good to do business. It's very open to investment. Its regulations, its laws are very open to people coming in and working. So it has a lot of advantages to it. So to answer your question, I think that what exploration money is available will be looking very closely, very positively at Namibia and the Orange Basin because of the opportunities that we have, because of also the business environment we can work in.
I'll just make a very technical short reply, Klaus. Ultimately, we're banks at the end of the day. We have to guarantee depositors their money, and I know the Namibian Central Bank's here today. So any bank is pretty much the same. Out of $100, about 15 is our capital, the rest is citizens' funds. If we lend it to exploration, there's no guarantee that guys can find something that's competitive or be a development price works. And we simply can't guarantee the citizens their money if we put them in exploration. So that's the source of Neil's reply.
Thank you very much. My question is more on refinery capacity. We've seen refinery capacity diminishing. For example, in South Africa, we've seen several refineries shutting down, and there seems to be a freeze or a reluctance to invest in refineries, maybe the greater Europe. Would that be considered a risk to Namibia being able to monetize its hydrocarbon discovery? Thank you.
Yeah, it's a slightly broad question, so I'll try and answer it as follows. So a large number of the global refineries were built basically in the 60s and 70s, being focused on gasoline. Until the diesel scandal in Europe was a growth in middle distillates and diesel demand. Now there's often as much a focus on petrochemicals as anything else. And the refineries that have been built on the on sort of Arabian Gulf, west coast of India and so on. The demand is still the same, about 100 million barrels a day, as Neil mentioned. Not many refineries have been built in the last few years, and there's every expectation that the output from Namibia can be sold in the global markets. And I'm moving a bit more into Neil's area a bit here, in particular if it's light oil, which is the most attractive for the global refining pool. So we're not seeing any issues on that at the moment. Certainly within the African environment, there is a continued reliance on imports. You have one major refinery development, which is the Dangote refinery in Nigeria. Beyond that, it's only really Uganda, which is landlocked, that's been considering refineries. And in the case of South Africa, as you mentioned, a number of the coastal refineries have had difficulties. But to the extent there are material discoveries on the Orange Basin, who can predict the future?
I'll just step in and say, my blunt answer to that is I don't think that's going to have any impact at all on the development of the fields here. The oil will be, it isn't likely to touch the Namibian land at all, unless Namibia decides it wants to build its own refinery and be supplied from that. But I think that market's just going to go into the international oil market. It'll go in a tanker and it'll disappear off into the trading world. All our understanding at the moment is that the crude is good quality. It's a sweet crude. We haven't heard of any negative discussions around that. Most West African crudes are well received globally into the refining market. So I don't think we need to worry about South African or African refinery capacity affecting the Namibian oil at all.
Thanks. Any other questions?
Thanks. I'm Francois Val from Ictus. I really like the example of Guyana being a positive one with a recent oil find and what they're doing. But I think we learned just as much from bad examples, even more. that we do from good examples. Are there in your data collection any recent oil finds that you can point out as examples where they've maybe done the wrong thing or they've approached it in an incorrect way, where we can learn one or two things only for the points of this discussion? Thank you.
It's an interesting one. I think the key word is recent. So in terms of recent discoveries, I'll probably ask Neil to help me on this. In the last 15, 20 years, I can't think of anybody who's done a really horrific job. Ghana is fairly recent, they're sort of okay, middle of the fairway. I mentioned Papua New Guinea on the LNG side, Peru, LNG, and really trying to think of anyone's doing it. In essence, what you're talking about is the resource curse. That's what it's labelled as in the media, where the challenge of the resource curse is normally the post-colonial period in terms of mining output plus also oil, where the underlying issue is that product is not beneficiated at the point of production, and that led to all of the things that we talked about. But aside from the resource curse per se, over the last 20 years we've had a whole range of international legislation that's helped matters. You've had international money laundering legislation, you have things like the EITI, the Extractive Industries Transparency Initiative. You've had international trade rules, among others. So the general potency of the resource curse has declined. But, Guyana is a good example. The place next door to Guyana, Suriname, hasn't got the same level of resources. They're running a couple of years behind. They're also potentially good examples. Senegal, Mauritania, isn't looking too bad on energy at the moment. Any others?
Yeah, I think to answer your question is focusing on Africa. There's probably two different strains of challenges. Paul mentioned Ghana. Ghana had a deep water discovery. It was developed very quickly, very efficiently, and it's been on production 10 years now. If you look at Egypt with the Zor discovery by ENI, it was discovered and developed extremely quickly, and ENI will do the same thing with Valley in Ivory Coast for sure. But there are examples across the continent of discoveries that have been made and have not yet been developed. But it's not necessarily because things have been done badly. A lot of it's related to government legislation. So you've got South Africa with the discoveries in Luapara, you've got the discoveries in offshore Tanzania, you've had the activity in Kenya, Uganda. A lot of these things have been delayed because of the inability of the host government to come up with a taxation regime which is fair to the oil companies. People need to recognise that the oil companies need to make money. They need to make money to develop their activities, and they will fight quite hard and will fight their corner quite hard with regard to the taxation regime that's been placed on them. Namibia has the opportunity to welcome in many oil companies, get them established here, and then work with them to make sure that the taxation regime is fair. Mozambique is a good example. Mozambique found their fields. There's been very little delay to that other than the activity, the insurgents activity, which is actually delayed construction. But that's not been related to legislation. So the key thing I would say with regards to that is to make sure that the legislations that are in place are going to encourage the activity from, first of all, the oil companies to develop those fields and come and do the exploration. But also to make sure from a local perspective that it's advantageous for these companies to use local companies, so the local companies need support to develop and grow. And again, looking back at my history in the North Sea, there was very little interest in supporting the ecosystem, and all of the ecosystem became foreign companies. And I started in the oil business in the late 1980s. 90% of the people I worked with were American. They were imported because there was no encouragement for local training, etc., etc. There was very little local service companies. It was all the big American service companies. So it's all about legislation, to be honest with you, to make sure that you don't make those bad mistakes. But what have been the bad mistakes across the continent? It's delays. It's delays to getting that oil out, getting that revenue into the country. And at the end of the day, you come to an agreement which is probably where you need to start. So that's possibly a lesson that needs to be learned, to look at those kind of issues.
Good morning, and thank you so much for blessing us with your company. I'm sure you're all in deep reflection about the prospects and that you're excited about the future. I have a landlord that came to me a week ago, and she says the property is in the market because her children, a young family with babies 3 and 4 years old, are immigrating to Guyana, and she thinks that she wants to join them because she's also lost her husband in the deep dark winter of last year to COVID. And I immediately took a note and I said, why on earth would anybody want to immigrate to Guyana? It was such a strange thing for a Namibian family to be immigrating to Guyana. And they are a family of lawyers, and after I read the story, it just all made sense about why people see the opportunity. And the world is our oyster as the youth, and I believe that we are all raising the tide so that we can be ready for when the opportunity is on our doorstep. So we've spoken about the future, but at Standard Bank we say, how about now? I have a small gift, a takeaway gift for you, and it's oyster mushrooms that we are producing at a site outside of Brakwater in order to deliver on our vision of having a shackless Namibia. And as much as we're talking about oil and gas into the future, we have a strong presence and a play in the biomass sector in the country. And our executive team visited MIT in the United States about 5 years ago as part of our innovation partnership, and saw a very strange object sitting on a professor's desk. And our previous chief executive, Vetumbavi Mungundwa, is a very curious man, and he asked the professor, so what's that object on your desk? And the professor replied that they are in partnership with NASA, researching housing solutions for Mars. And Junius then said, if we've got a housing challenge in the world, why on earth are you researching to solve for a housing challenge in Mars? And the professor looked at him and said, you've got my support. We are signing MIT to come to Africa, work with Standard Bank in Namibia, and start a new research project so we can solve for the housing challenge on Earth. So we've had the BioBrick initiative before this discussion, and we started the initiative with selling rubbers as a symbol of a brick to schools. For $5 we would stand on street corners and shake hands to raise money from you. And we started this partnership with the Sheikh Dwellers Federation, where we have built in excess of 600 houses already that we've converted sheikhs into homes. And the research project had started with MIT about 3 years ago, and they came here and looked at what natural resource we have. And the encroacher bush is the natural resource we have selected to run this project with. So we collect wood chips that are left over from various sites that produces charcoal, as we are one of the top 10 charcoal exporting countries in the world. And that leftover material we then use to grow mushrooms. The oyster mushrooms you have, we grow in containers. The material that remains behind after we've harvested the mushroom is a combination of the chips, the wood chips, as well as the mycelium. That has got a very strong binding effect. We then bake the bricks, and we work with Namibian architects and engineers as we are testing the strength of the bricks. The material has the potential of replacing plastic, all the other ceiling boards that are made from material that is not as environmentally friendly. And we actually have made significant progress in that research and development initiative that we've got with a world-leading class university. And we are proud to be presenting you with our mushrooms, which we sell at most of the major retailers in the country as part of raising money for our BioBrick initiative. So I trust that you're going to enjoy that and continue supporting our journey as we deliver on our purpose, that Namibia is our home, we drive her growth. Thank you. So as I'm extending the vote of thanks to both Neil and Paul, and all of you this morning for sharing your knowledge, for taking your time to help us engage stakeholders and get our organizations, our entities, and our people ready for the opportunity. Thank you very much, Paul and Neil. And thank you to Droombos for an absolutely warm venue this morning. I think we were all taken by surprise, and to all the technical teams and my staff for facilitating the event. So enjoy. Thank you.